Okay, so you're thinking that, hey, I want to launch a new Rafi campaign, or maybe, hey, I'm looking for a really new, salacious market that I can get into that's going to be juicy and have lots of deals, but I don't know where to start. Today in this video, I'm going to show you exactly how my team and I use the data within a given area, all free tools, in order to generate a very clear and a very profitable strategy that you can leverage at any point, at any time, in order to start generating some deals within Rafi. If you stick around to the very end, I will actually go ahead and create a campaign with you together in Rafi so you know exactly what that should look and feel like. Let's get started. So let's just say we want to pick out an area. I'm going to come in here to Google and I'm just going to pick a random state that we can start thinking about. Maybe that's Alabama. So let's go to top cities in Alabama by top or population. Okay, so we're going to pull that up. I should come up with some sort of list. 10 largest cities in Alabama. So we got Huntsville, we got Montgomery, we got Birmingham, and Mobile. Okay, let's just go ahead and pick one of those just for the purposes of this. Let's go to Huntsville. Huntsville, Alabama is the city. So let's go to a new tab. Huntsville, Alabama. What I want to know is what county is it in? What county is Huntsville, Alabama in? So I'm going to go ahead and pull that up. Looks like it's Madison County. So that will be where we can start our case study for the day. So let's take Madison, Alabama, cities, towns by population. So here's what I'd like to do. What we're trying to do is we're trying to subdivide a market into all of the various sub-segments that we can go out and target. Because at the end of the day, the more specific that I can be with a strategy or the more defined that I can be in my approach, ultimately the better outcome. Your messaging and your location is going to land in better ears. So let me show you what I mean. So we've got Madison County pulled up here. And I should have the ability to pull up all of the towns and the cities. Looks like there's a handful. There's Huntsville, Madison, New Hope, Gurley, Owens Crossroads. What I'd like to see is a list of these cities by population. I'm going to try list Madison County, Alabama, cities, states by population, cities, town. There we go. So pull up something like this. Perfect. So we got this. So we've got Huntsville, Meridianville, Harvest, Moores Mill, Hazel Green, Owens Crossroads, New Hope, New Market, Gurley, and Redstone Arsenal. So there's kind of two milestones that we're looking for. We're looking for 60,000 or we're looking for 300,000. And let me explain. If we were going to go out and we were going to target a county, we would actually want to look for a county that has at least 300,000 population or more. If we were looking at a city or town, we would be looking for a city or town that has 60,000 population or more. Now, that is not to be said that if you have a lower population, you can't get amazing things done. You absolutely can. This is just a nice ballpark figure. But the reason we choose these figures is because of the 1% rule. Let me explain what I mean. If you take 300,000 and multiply that by 1%, you get 3,000. What that number is showing is the anticipated total amount of inventoried properties over a 12-month span. And why did I pick 1%? Well, nationally, if you look at the last 25 years, there is almost always about 1% of the total population is listed. Now, it can fluctuate, of course, up and down depending on where you are, but it's just a good baseline number to stick with. So here, 300,000, we would have 3,000 listed properties over a 12-month roll. For somebody that is going to be targeting those for investment opportunities, that is a great big number that you can use to capitalize. If you divide that by obviously 12 months, now you're looking at what you should realistically be able to target over a 12-month span. And then let's not forget that you're not going to actually be targeting all of that. There's going to be a certain subset of that you're after. So you're left with essentially a nice hopper full of opportunities that you can actually go out and target. So here we've got Huntsville, and this is a city at 231. It's well beyond our 60,000 threshold. But then every other population of these other towns, cities, whatever you want to call them, is significantly lower than that. So even if I added up basically number 2 spot all the way through number 10, it's still not even 60,000. So what this tells me is that I don't have much of an opportunity to subdivide outside of Huntsville as its own city, and then maybe the rest of the county. But the other thing I can think about is maybe if I wanted to target this area, there's nothing to stop me just from targeting the whole county, because right there at the 231,000 plus all of the other stuff, realistically, you're right around 300,000. So that will be your decision to go. Let's say, however, I went to a county that was really big. So let me pull up one that I know is giant, Miami-Dade, and do the same exercise there. This is a much different story. Miami, just proper, and this is based upon 2018 data, is 473,000. This city is at 238. Homestead at 70. So you can see here, almost all of these cities here on the first page basically qualify for that 60,000 person range. So if you were to want to go out and target an area like this, the first thing that you're going to want to do is think about how you're going to subdivide the market into different target areas. So once you've kind of selected this and understood, okay, here's how I want to think about subdividing this stuff and where I want to land, we can move on to the next step. So let's go back to Alabama. So we've got Huntsville. Let's just pretend for a minute that I only want to stick in Huntsville. That's where I feel, maybe that's where I am. I'm very comfortable in an area. Maybe I've heard good things about it, but I really want to explore if this is a good opportunity for me with Rafi or not. So the first thing I can do, I can take some very free, simple tools in order to pull this up. But the first thing I'm going to do is I'm going to go to Zillow and I'm going to type in Huntsville, Alabama, Market Insights, Zillow. I want to find this one right here, pull this up, and it should be a page that looks like this. So the first thing I'm going to do is I'm going to scroll down here to the middle, and it should look like this with a bunch of these things that are in here. Pay special attention to total inventory, new listings, and let's walk through each one of these things just to show you how I am thinking about each one of these components. So number one is total inventory. So here in Huntsville, in the month of June, there was 916 total units for sale. Out of that, there was 283 new listings that came on the market. So we look at this as a ratio, and what we'd like to see is that 25% or more of all of the inventory that is available is actually new inventory. What this shows us is that there's a nice, healthy volume of inventory that's coming onto the market to replace the stuff that's probably exiting. Now, anything that's lower than that 25% threshold just means that there is going to be diminishing inventory, so your opportunities could slowly get smaller and smaller. But again, it's one of these things that all of these markets are changing all of the time, so more of just an acknowledgement of where we're standing at. The next thing I'm going to look at is median days depending. So in this market, we're at 23 days depending. Now, as it stands today, the median days on market for the US is 64 days. Anything that's under that is obviously a faster market. Anything over that is obviously a slower market. Now, anything that's under a 30-day median days to pending is an incredibly fast market. So right now at 23 days to market, what this tells me is that there is inventory that is moving very fast, which typically means that there are a lot of buyers that are very interested in the properties within this particular area. And we can kind of further paint this picture by actually looking at the median sale to list ratio and some of the other figures that are in here. Let me show you what I mean. So 98%, that means that on average, homes are selling for 98% of whatever they're listed for. Our median list price is 324. The median sale price is 281. So the picture that this is telling me is that there is a healthy amount of inventory, 916 total units. There's 283 total units, roughly a third are new properties coming on the market each month. But there is a price concession that's taking place between what properties are listed for versus what they sell for. So right now, this is about a $40,000 spread, but there's still a tremendous amount of activity from buyers in the area. So things are still moving and moving fast. So if I am looking at Rafi as a platform that I may want to market with, the first thing I'm going to pay special attention to here is this median list to sale price. And what I want to start thinking about is who the person is that could be receiving communications or my marketing material, which is probably a real estate agent. And so if they do, one of the things that we should be aware of is what are they communicating with their buyer? So think about it this way. I'm a real estate agent. I have a client that I'm working with. I'm going to list their house. I am living and breathing what's happening in this particular market every single day. So one of the things that I'm going to be counseling my homeowner on is what they should expect as their property hits the market. So right now I might say, Mr. Homeowner, hey, as we go to list your property, you're probably going to have to take about a $40,000 decrease from whatever you list for versus whatever it ends up selling for. Now, that might just be a price decrease. That might be some way that they structure the deal. That doesn't really matter. But from our standpoint, an investor that's looking to come in and get a deal done, this is valuable because we know we've got a nice little $40,000 buffer right out of the jump that we could play around. The second thing I want to do is think about how median days depending might land with an actual campaign. So the faster a market is, the faster I want to get my offer in front of all of the, we'll call them qualified opportunities. Whereas the slower the market is, the slower we actually want to get our offer in front of the qualified opportunities. It's a nice dichotomy. Here's the last thing that I'll say as it relates to median days depending and some of the market insights. A slower market, no surprise, should be harder to move a deal, but easier to get a deal under contract. A faster market might take a little additional time to get a deal under contract, but at the end of the day, you'll be able to move that property a lot faster. So there's not really one size fits all for all of these various markets, and there's not necessarily one thing that you're looking for per se. It's just an awareness piece around how we're going to craft our actual strategy. One thing I didn't mention was actually this total inventory. One of the things that we look for as it relates to inventory is a nice healthy figure for cities that is anything really over 500 and anything that's over 1,000 for counties. So here in Huntsville, we're targeting just the city. We're at 916. So that's a nice healthy figure that we can consider. And anything lower than that 500 or 1,000 inventory threshold just means that there's going to be less availability for us to send out offers. Not necessarily a good or a bad thing, but it can mean that you're going to be limited in the amount of opportunities that are out there. Let's look at one more. So we know that Huntsville is in Madison County. So I'm gonna come in here, Madison County. Madison County, Alabama has a slightly higher median sale, but now it looks like there's a significant amount more of inventory that's out there. And you'll see how this is now a little bit different than what we just looked at. A relatively similar days depending. So this is 22 days versus it's 26 days. There's still that nice $40,000 difference between the two, but the median sale to list is a little bit higher. So it's at 99%. But there's also a significant amount more of inventory. So if I'm in the shoes of an investor who might be thinking about going into this market, one of the first things that I should be doing is weighing and comparing and contrasting these different geography sizes. So as you saw, we started at the city and we saw that there was 900 units. If we went out to the county, we got 1,800 units. And I should kind of compare and contrast how I want to tee things up and slice and dice. For this one, because Huntsville is roughly 300,000 population, and that's basically the entirety of the county, I would actually suggest that we go at the county level and capture all of the available inventory that is here. We have a very similar days on market, so we don't have to have a totally different strategy as it relates to getting in front of the buyer at the right time. Here we have a 22 days median days depending, which is not too different from the 26 days depending that we saw on the previous page, which means I don't have to think about different strategies there. The median sale to list and the difference between the list and the sale price are all relatively the same. So I know that I can have a similar strategy for both the county level and the city level. So that tells me that because there's more opportunities at the county level, I'm just going to roll things up and just target the entire county. So now the next thing I really want to do is I want to start thinking about the buyer, right? Now we know how the inventory is moving. We know what the market is telling us, but we need to consider how we're going to actually make money on the back end. Now, maybe you already know this area and maybe this is something that you can skip over. So feel free to do so. But maybe you're also coming into this with fresh eyes and you want to understand, hey, who is my end buyer? Because remember, not all buyers are the same. Maybe you have a hedge fund that you could ideally work with that's looking for a very specific buy box. Maybe you have a whole series of buy and hold investors that are after rental properties. Maybe you should be catering to flippers. And by the way, depending on where you are, it could be all of those things. It could be a number of those things, but it's always a different story. And there's a couple free tools that you can use, but for this, I'm going to use Investor Base. And I'm going to go back here to Madison County. But I want to pull up the actual Zillow page for Madison County. Madison County, Alabama, Zillow. So we're going to go here. And the first thing I want to do is I want to just get a assessment for the median range. And what I mean by that is if I come back to my Madison County, Alabama, the median price point is $310,000. What that is telling me is that this is the sweet spot where most transactions are taking place. As an investor, if you might be looking to sign a contract or even novate a contract, you always have to have that end buyer in mind to make sure that whenever you get a deal under contract, you have it with the understanding that the person who purchased it from you either needs to make money or they need to be a retail customer who is very happy to pay whatever you are going to sell it to them for. So the way I'm going to look at this is I'm going to take this $310,000. I'm going to go back to the total units available. I'm going to change this from sold to for sale. I'm going to change this price point from minimum, we'll keep it at 0, but I want to change the maximum to 350. Actually, you know what I'll do? I'll change the minimum to 200 in a way to box in where that median range is. And as you can kind of see, it looks like, you know, homes are all over the place. What I'd like to do here, since we're targeting the whole county, I want to find an area where most of the homes are clustered. So that seems to be like probably this area up here or this area down here. I'm just going to pick one for the time being. I'm going to go north. North sounds and feels good. So I'm going to go in here. It looks like there's a lot of volume available in here. It looks like these are a bunch of new homes, so that's of interest. Looks like there's maybe not so many new homes in here. Looks like up here there's a bunch of new homes there, some inventory here, more new homes here. So for the time being, what we want to find is not new build. But by the way, I should quick mention that anytime you see a lot of new construction, that's a really, really good thing. It means there's a ton of activity in the area, and it just means that generally that's in a better place to invest because there's population growth. So let's find an area that's got a bunch of properties. I just picked this one right here. So we got 1, 2, 3, 4, 5, 6, 7 properties that are all for sale. And I'm just going to pick one, 240K. Actually, let's pick this one, 328K. I picked that one because 310 is that sweet spot, and 328 is pretty close. I'm going to go ahead and pull it up. I'm going to grab the property address off of this property. I'm going to go to investor base. I'm going to enter this property in, and I'm going to go ahead and hit search. That is going to bring me to the area. What I would like to do is I would like to take a quick scan to understand if more flips are happening or if more rentals are happening. So as I can see, these little keys that show rental properties and these little wrenches, they show flips. And if I was just to look at my target property, it looks like there's probably more flips happening in the area. So what this should tell me is that, hey, my end buyer, depending on what you're trying to do, but more than likely, if this is an investment opportunity, should be a flip. There's more things that are happening here. Now, of course, I can go through this and we can go into each one and see like what kind of the spread is, but a very quick baseline should be able to tell you what these people are looking for. So here we had a property, it was a 3-1, they purchased for 140. Here we had a 1-1 that was purchased for 61. Here I had a 1-1 purchased for 225. Here we had a 3-1 purchased for 236. As you can kind of see, I'm going through here and I'm just looking at the bed bath count, what it was purchased for, nothing crazy. And this is starting to create a story for me. So it looks like almost all of these properties really were around that 100,000, low 200,000 price point. Again, end buyer in mind. That means I should be looking to try and keep where I'm going to start the conversation with my end buyer at 100,000 to say 250,000 is kind of like a nice range if they're going to be looking to flip it. Let's do this exact same exercise, but let's actually look at rental inventory because it's going to be a little bit different. So let's say, for example, that we pulled up the same property and all of these were keys, just indicating that there's a lot more rental opportunities here than anything else. Well, I can go and pull these up, and I would want to start taking note of each one of these things. But the first thing I can do is I can actually come back here, pull this up, select from for sale to for rent, apply. And I can see that on average, I'm at 1.7, 1.6, 1.5, 1.7. So there's a couple rentals that are nearby, all under 2,000, but all over 1,000. So that is kind of a special number because as an investor, what I want to be conscious of is if I need to go get a deal under contract and I'm trying to serve a rental or a landlord, whatever you want to call them, I should be trying to keep that as close to that 1% rule as possible. So I need to be thinking about HOA fees. I need to be thinking about how much the actual purchase price on that property was. So for now, we can just kind of set that one aside because we understand that this area is more advantageous from a flipping standpoint, and we can proceed with that strategy. But understand that you'd want to do this exact same exercise if there were a lot more rentals in the area to make sure that you're adhering to the right end buyer. Okay, so we know we're going to be choosing between 100,000 and 250,000 as kind of the nice sweet spot. We know that the upper range of that is about $310,000. So how do we position an offer, and how do we position this strategy in a way that gets us to the right zone? So up next, I'm going to actually go ahead and pull up Rafi, and we're going to create a campaign together with all of these numbers in mind. All right, so I got our demo account pulled up here. I'm going to go ahead and come over here to the thing that says campaign. I'm hit the little plus button, and we're going to create a campaign together. So we already determined that if we roll back our conversation, we want to probably target the county. It had the best bang for our buck, the most amount of opportunities, and there wasn't a crazy difference in some of the market data if we even went down a little bit further into some of the more metropolitan areas. So we're going to target Madison County. We also know that flipping seems to be the way that we want to go. So we need to kind of keep that in mind and pre-bake into our strategy how we can make sure we're serving somebody that wants to go in there, flip the property, have a good solid ARV upside. And we also know, based upon our numbers, that they're typically getting that property under contract around $100,000 to $250,000. So it'd be really good if we could kind of land in that sweet spot. So I'm gonna go to Rafi, and we're gonna call this new Madison County flipping campaign. Now we're gonna target the county. We're gonna do Madison right there. Lovely. Offer discount. We'll come back and we'll decide on that here in just a minute, but we can go ahead and create. So actually, if you remember, what we want to do in a very fast market is we actually want to get the offers out faster. So what we like to do is in a market where the median days to pending is less than 30, we actually like to send out the offer at half the time. So what I mean by that is we'd want to send this one out at 11 days. So I'm going to come back here, filters, time on market. I'm going to type in 11 days. Now, property types, this should really be a characteristic or a filter of whatever you are after, but an easy way to come in here and get an idea on how much is what. We can come back here, we can zoom out to the whole county, and we know that right now there's 1,500 properties in here, but let's just take off some of this stuff. Let's take off the coming soon. Let's hit apply. And as you can see, there's a whole bunch of different home types that are available to us. Let's first look at homes, hit apply. That updates the results to 1,300. So that tells me that there's a lot of opportunity there. I'm gonna do apply just townhomes. There's 71 there. And I'm gonna apply multifamily. And there's only 7 results there. And you can do the same process if you like with all of these things. Lots and land can be another excellent one. Depending on where you are, apartments can be another one. But clearly homes was the vast majority of that stuff that's out there. I'm gonna do one more double check though. I'm gonna go back to Investor Base and I'm gonna look at all of these and I'm just gonna double check. So yeah, it looks like this one was a single family. Looks like this one was also a single family, single family, single family. So that lines up. Actually, this one was an apartment. Sorry, single family, single family, single family, single family. Okay, so they're all single family. So what that tells me at my strategy then is that this should be homes on the market for 11 plus days. The next thing we do want to do is we want to come in here and put a price filter. So as we recall, the sweet spot for our end buyer is between $100,000 and $250,000. So ideally, we'd really like to get in there somewhere. We also know that the vast majority of housing in this area is landing at $310,000. We know that we're going to come in at an offer discount that's in there. So just for an easy math, let's say we take $310,000 and take 70% of that. That is $217,000. So here's an easy thing that we can do. We can just make the top of what we want to be targeting really right around whatever the median is to make sure that at 70%, at 60%, or wherever you are already landing in a zone that if you want to go out and then assign it to somebody, you're already in a sweet spot for all of the parties that are involved. So here's what you want to do. You want to take the median home value and you want to find out what the difference is between that and that sweet spot that we were just referred to. So say between 100,000 and 250,000. Let's just pick for an easy number, 200,000 to get you in there. So that's $110,000 divided by 310. That's 35%. So that means I could, in theory, start my conversation by coming in at a 65% discount on all the properties that are listed. And the max price that I would be offering on that would be $310,000. That is a great strategy to start with. Keep in mind, this is going to be an iterative process. So when things launch, you may have to come up a little bit on that offer price depending on what happens. But I'm going to go back to my strategy here. Max price is going to be $310,000. And let's come up here and just look at our counter. So it didn't change a lot, the total available properties that are in there. So let's change the max price to $310,000. And as you see, it actually reduced the total amount of inventory that's in there significantly. It's because we're cutting out a large percentage of the stuff in there. But that's okay. We are looking for a very specific type of property that will ultimately suit our end buyer the very best. Now, you could come in here and you could put bed bath count and you could put property features, all the other stuff. I don't think that's going to be as important or valuable for this, especially keeping in mind that all of these were differing size single family properties. So that seems to be less important. So for now, I'm just going to leave all of that alone and I'm going ahead and hit update filters. The last thing I want to do is we landed at 65%. So I want to go ahead and change the offer discount to 65% and go ahead and update that as well. So now we've created a strategy that is going to work very well with both the exit strategy that is ideal for our end buyer or end consumer, whichever way you want to look at that. It works very well within the particular market because we are adhering to the market data, and it should allow us to start getting some very good feedback right out the gate. So let's just go through and summarize each one of these bullet points as it relates to the campaign strategy that we landed on. As it relates to time on market, we chose 11 days. And we chose 11 days because right now this market is moving at 22 days. Any market that's moving faster than 30 days, we want to split the difference and get our offer out sooner. We also chose single family properties. We know that because that is the vast majority of the inventory that's available to us. And it's most of the inventory that our end buyer is actually most interested in. And we also chose $310,000 is top of the purchase price. Well, we chose that quite intentionally because we know that the sweet spot where our end buyer, our investor, is purchasing a home is between $100,000 and $250,000. So picking a midway point in there is $200,000. So the difference between $200,000 and $310,000 is 35%. So if we take 35% of that maximum threshold, that is 65% of our top of the market offer price. That should land our offer at the right price point with the right person and hopefully start the conversation on the right foot. I hope this was super helpful. I plan to make more videos like this in the future on how you can think about the various strategies and how you can use and leverage our platform to make really smart, educated decisions. Thanks for joining. Hope to see you again soon.